I believe Ethereum will make a massive comeback in 2025, and especially from January to May of this year is the best time to be positioned in Ethereum. In today's video, I will dissect my full thesis on this. I will break down all the catalysts driving Ethereum in 2025, including the money printer and global liquidity, Trump's upcoming inauguration and his endorsement, the seasonality of Ethereum, Ethereum's role to lead the upcoming altcoin season, the Ethereum ecosystem, especially around institutional DeFi and RWAs, the Ethereum ETF's effects, and lastly, I'll give you my price prediction for ETH by the end of 2025. Strap in, let's get started. Welcome back to the VirtualBacon channel. My name is Dennis. I'm a crypto angel investor for the past 6 years, and I have invested in over 100 crypto startups. On this channel, I share views on market trends and investing strategy to build wealth in crypto. Our long-term audience of the channel know that I have been an ETH bull for the entirety of this cycle, and I always believe that Ethereum will outperform Bitcoin and by a large margin. But why hasn't it happened? Why hasn't Ethereum moved with all the ETF hype and the altcoin movements? The key to understand is that Ethereum is an institutional driven asset. It is not meant for the retail audience. Most of the crypto native investors do not hold large amounts of Bitcoin or Ethereum because, simply put, they don't have the crazy multiples of upside anymore. However, for the institutions, they still have a large appetite for the only other crypto which they have access to, being Ethereum through the ETFs. It's all about the timing for these institutions. When the stars align, that's when they can truly start to scale in. Okay, let me break down why I believe institutions are about to flood into Ethereum in the first half of 2025. I will do so by showing you the three main catalysts that all align during this time period. The first catalyst we have is the upcoming Federal Reserve's balance sheet pivot. Simply put, the Federal Reserve needs to turn on the money printer soon and inject liquidity in order to help with the US debt crisis and the US Treasury bonds problem. I have explained this concept in depth in my previous live stream about the money printing and how it will trigger the crypto bull run. You should check that out in this video right here. A quick summary, the US has a huge debt problem that they cannot solve. As more and more people lose trust in the US government and not want to buy Treasury bonds, the US Federal Reserve needs to step in at some time. They are the last buyer of resort, and they can do so by start printing money and increasing the Federal Reserve's balance sheet and injecting liquidity by buying Treasury bonds directly. Now, we have been anticipating this pivot to happen since as early as May, when they made the early warning signs showing us at the FOMC meeting that they have slowed down the reduction of the Federal Reserve's balance sheet, which typically leads to the full pivot in just under 6 to 8 months after. So it's highly likely that we will have this full pivot either at the next FOMC meeting on January 29th or the one after on March 19th. You also have to know that Trump's inauguration comes in on January 20th. So this clears all the previous administration's potential to delay this even further. And if you study Trump's policies, he's actually very pro-inflation and pro the devaluation of the dollar. So this is very likely to happen after he comes into office. You can track the Federal Reserve's balance sheet directly on TradingView with this ticker WALCL, and you see right here it is still decreasing as we speak, but at some time over the next 2 to 3 months, hopefully at one of the FOMC meetings, the announcement can come in and the balance sheet number can start to bottom out and start to tick up again. This directly benefits Ethereum, and I'll show you that right now on the charts. This is the chart of Ethereum versus Bitcoin, their ratio, and this shows you how Ethereum is doing relative to Bitcoin, if it's overperforming or underperforming. And overlaid on top is this red line. This is the Federal Reserve's balance sheet. As you can see, back in February of 2018, when the Federal Reserve's balance sheet started to decrease, so did the Ethereum BTC ratio top out during this period. And you remember February 2018 was the top of the 2 bull markets ago. Then you have August 2019 when the Federal Reserve made their pivot to the opposite direction and started increasing their balance sheet and injecting liquidity. So did Ethereum versus Bitcoin ratio bottom out exactly in the same week. And then we had the extended bull market until the very end at around March to April 2022, this is when the Federal Reserve made their pivot yet again and started shrinking their balance sheet. And look at what happened to the ETH BTC ratio. It topped out right around these months. And since then, it has been consistently falling. Very simply put, the Federal Reserve's injection of liquidity directly benefits the risk on assets. And in crypto terms, right after Bitcoin, that gives you Ethereum. So during the next two FOMC meetings, if Jerome Powell and the Fed comes out and make this pivot announcement, we will for sure see the Federal Reserve's balance sheet start to bottom out and start to tick up again. And chances are the ETH BTC ratio will start to follow as well. Another interesting pattern to note on Ethereum is its seasonality. People often say sell in May and go away. It can be relevant to Bitcoin or the overall market, but for Ethereum, this signal is exceptionally powerful. Let's use the seasonality indicator just built into TradingView, and you see when we apply this to Bitcoin, it's pretty distributed. Some years it has red summer months, some years it has red winter months. But when you apply this to the market of Ethereum, you see that the first half of the year is on average a lot more green than the second half of the year. Not only this, but when you apply this same chart to the ETH versus BTC ratio, you see even clearer of a picture. On average, from the months of January to June, Ethereum tends to outperform Bitcoin. However, from the months of July to December, Ethereum tends to underperform Bitcoin. This average is taken over the last 10 years. There's a lot of data to back this. So statistically speaking, right now is a much better time to be positioned in Ethereum versus Bitcoin, at least until the summer months. The second catalyst coming for Ethereum imminently is Trump's inauguration. Trump will come into office on January 20th, and a lot of people don't know this, but Trump is actually a huge bull for Ethereum. Not so much vocally, but in his actions and in how the market perceives it. Here are all the examples over the years. First of all, Trump has issued his NFT collections multiple times on Ethereum. Trump also has his own DeFi platform called World Liberty Financial, which is powered by Ethereum and based on the Aave DeFi protocol. The Trump family office even has an Ethereum wallet that's publicly tracked, and over this past few months, they have been actively making trades on-chain, picking up Ethereum-focused DeFi tokens, which we'll talk about in a bit. Aside from the DeFi stuff, Trump also has promised to bring on a new chair of the SEC to replace Gary Gensler in day one. And one of the critical priorities that they have listed is to formally withdraw and reconsider the proposed amendments to Rule 3B-16, which proposed to expand the definition of exchange to include DeFi protocols. Simply put, this was a previous ruling that put a lot of DeFi protocols at a gray area that they cannot operate in the US, such as Uniswap. So on day one of his inauguration on January 20th, when the new SEC chair comes in, this is going to be reconsidered and likely withdrawn. You can imagine the benefits this will have on the Ethereum-focused DeFi ecosystem. The new SEC also might bring staking back to the Ethereum ETFs. In this interview just 2 weeks ago, the SEC Commissioner Hester Peirce has hinted that they will reconsider the crypto ETF staking, which were previously banned, so all the Ethereum ETFs currently do not have staking. If this gets reversed, all of the Ethereum ETFs can have staking, and that will boost the yield, that will boost the inflows, and ultimately that will help the network. The last positive coming from Trump that is not so obvious of a connection is in the Ethereum ETF inflows. Although the Ethereum Spot ETFs have launched since July, they have not had a good time for the entirety. In fact, they have seen net outflows, so people have been selling out of these funds up until this period when it started to tick up. And look at this date specifically, November 5th and November 6th. What was this coinciding with? You know it, it's the Trump election results date. So right after Trump was confirmed to have a new administration, look at what happened to the Ethereum ETFs. People became very positive on it, especially from the institutions, and the ETFs started to have great net inflows. This is why Trump coming into office will be another positive event for the Ethereum ETFs to have even higher inflows potentially. We will look at the ETF inflows a bit more in depth in a bit, but first, let's look at the Ethereum ecosystem, or lack thereof, so people believe. You see, although Ethereum doesn't have a huge meme coin or AI coin ecosystem, it is heavily focused focused on RWA and institutional DeFi. We have already covered that Trump's DeFi platform, World Liberty Financial, is built on Ethereum using the Aave protocol. And Trump's on-chain entity has picked up multiple tokens, all serving the Ethereum, DeFi, and RWA ecosystem. Specifically, they have bought Ethereum, Coinbase wrapped Bitcoin, Link, Aave, Ethena, and Ondo tokens. Trump's platform even had official partnerships with DeFi platforms like Ethena, where they will integrate certain stablecoins for their yield platform. Now, what do all of these platforms have in common? Well, they are all built on Ethereum, and they all serve tokenization and RWA. Remember this guy, Larry Fink, the CEO of BlackRock, and how last year he has all been praising the future of tokenization and bringing assets on chain? Well, this is coming full circle now. BlackRock has tokenized their Buildo fund on Ethereum and other Ethereum-based blockchains such as Arbitrum, AVAX, and Optimism. And when you look at the biggest RWA projects in crypto today, Mantra, Ethena, Ondo, Maker, Reserve Rights, Pendle, Axelar, Chintai, Origin Trail, Polymesh, Clearpool, all of these are built on top of EVM chains, on top of Ethereum technology. None of these are based on the crypto native chains that people trade and use on a lot. This is why you cannot look at the degen trading volume on Ethereum and say that, oh, the ecosystem is not flourishing. The RWA side is all on Ethereum right now. It's not on Solana or XRP or Cosmos or whatever else. So if you're bullish on RWAs, you have to be bullish on the Ethereum ecosystem because you will be using it. Okay, finally, the last catalyst on this list is the Ethereum ETF inflows. How much of it is actually coming in, and does it actually matter? Many traders will say Ethereum's price has not moved since the ETFs were approved and launched in the summer. And to that, I say you are right up until November of this year. But since then, the ETFs have started to have inflows, and we are starting to see Ethereum making its price reversal, especially against Bitcoin. The best place to track this is on this website called SoSoValue. You can compare all the daily inflows and outflows on the spot ETFs for Ethereum and Bitcoin. So first is this chart zoomed in where we have the total inflow and outflows since the Ethereum ETF has launched. And you see from July 22nd up until November 7th, the Ethereum Spot ETF actually had a net negative. You can observe that with this white line here. You see total net assets started at 10 billion. But by the time of October, it actually dropped down to 6.4 billion. And that was heavily correlated with Ethereum's price movement. It dropped as well. But look at this pivotal point here, starting from November 5th, when the ETFs started to come in and we have net positive inflow. From November 4th until today, January 6th, we had a growth of around $6 billion of net inflow assets. And the first important thing to note is that the heavy correlation it has with price. Whenever the ETF inflow is positive, price moved up, and the ETF inflow is negative, the price moved down. We have already talked about how Trump's election win triggered this ETF inflow to start, and his inauguration is likely to speed this up as well. But will this actually matter? Why is Ethereum still trading below its previous all-time high, unlike on Bitcoin? Taking a quick look on the chart, you see that starting from November 5th and November 6th, when the Ethereum ETF inflows start to get positive, the ETH versus BTC chart already started to go sideways of a trend instead of following the previous downtrend. This is already good to see. And looking at the actual flow numbers, since we had a $6 billion of net inflow over the past 2 months, we can look at how much of the total supply of Ethereum has been picked up by the ETFs. So $6 billion over 2 months is $3 billion per month of inflow. The current market cap of Ethereum is $395 billion. So here's the math. You take 3 billion divided by 396 billion. That gives you 0.76% of Ethereum's total supply that is coming in to the spot ETF per month. Now let's compare that with the inflows of Bitcoin. Although Bitcoin has had a much bigger net asset in management, it only accounts for around 5.7% of the total market cap. This is because Bitcoin is a bigger asset. So looking at the net flow of Bitcoin, it started at $28 billion since launch, and currently it sits at $110 billion. That is a total of $81 billion over the past year or 12 months. So let's do the math again. We have 81 billion divided by 12. That gives us $6.75 billion of inflow on average coming into Bitcoin per month. We take that and we divide it by the market cap of Bitcoin coming in at $1,865 billion. This gives us 0.36% of Bitcoin's total supply that is being bought up by the spot ETF per month. So now we can compare these two numbers and you see the real demand here. Although the net inflow is obviously much smaller on the Ethereum side versus Bitcoin, the percentage of supply is way different. The institutions are buying on average 0.36% of Bitcoin's total supply per month through the ETF, whereas they are buying on average 0.76% of Ethereum's total supply per month since Trump came into office. If this demand continues, and especially if it rises after Trump comes into office, we will soon have the institutions holding a larger total percentage of Ethereum's market cap versus Bitcoin. That will be a huge shifting moment that will tick that tells you Ethereum is really a much more institution-driven assets than all other cryptos. And a last quick note on other altcoin ETFs. Some people say, oh, why do you need to buy Ethereum for the ETF exposure for institutions? Just buy Solana or XRP or other potential altcoin ETFs. The answer here is that while the other ETFs will likely happen this year, and I have made this prediction in my last video as well, these other ETFs will take time to get first approved, then launched, and also to see positive inflows. The institutions always go from top to bottom, from lowest risk to highest risk for exposure. And we have seen this in the crypto money flows as well. Ethereum always leads the altcoin seasons. This effect will be amplified with the altcoin ETFs if this cycle is going to be institutional driven with a ton of altcoin ETFs. If Ethereum doesn't pump with more ETF exposure, we are highly unlikely to see other altcoin ETFs all of a sudden having random inflows coming in from Wall Street. That's why if you are waiting on institutions to come into other altcoin ETFs, you have to bet on Ethereum having that exposure first. Okay, finally, let me give you my price prediction for Ethereum by the end of this year. I have covered my price prediction for Bitcoin and for Ethereum in my previous videos from 2023 already. You can check them out in these two links right here. In summary, I still have the same targets for Ethereum and Bitcoin that's based on top of its outperformance. My assumption is that Bitcoin could do a 2x from here to reach around $200,000. And Ethereum could outpace that by 2x on top by doing a 2 times 2x equals 4x. If Bitcoin goes to $200,000, doing a 2x from 100,000, roughly speaking, the translated price would be for Ethereum to go from $3,500 around the same period before this price drop, correlating to the $100,000 mark, and for it to do 4x on top of $3,500. So that gives me a target of $14,000 on Ethereum by the end of 2025. And my 2x ratio target on Ethereum versus Bitcoin is also just taking a conservative estimate. Look at the last two cycles. In 2017, Ethereum outperformed Bitcoin by about 5x. In the end of 2017 to the beginning of 2018, then we have 2020 in the bull market year of 2021, Ethereum outperformed Bitcoin by about 3.2x. Even if we assume a diminishing return for the 2025 bull market, just for Ethereum to do a 2x on top of Bitcoin, that is honestly totally reasonable. We're not even saying Ethereum is going to have the same levels of dominance in the 2021 bull market top. Here are some meme trend lines if you're into this sort of thing. So you see Ethereum versus Bitcoin ratio bottomed out in early 2017, then topped out in early 2018, bottomed out in September 2019, topped out in late 2021, and then about to bottom out in end of 2024 and hopefully top out again in end of 2025. This is all very simple diminishing returns based on cycle analysis. Given the ETF inflows, the seasonality effect in the first half of the year, a potential Fed pivot to start printing money, and the more DeFi-friendly regulation under the new administration, I would much rather be overly bullish on Ethereum right now than be underexposed and still call it to not make a run this cycle. So that's my target, $14,000 per Ethereum by the end of 2025. Let's see if it can happen. That completes my full analysis on Ethereum and why I am more bullish than ever. You have to pay attention to all of these catalysts, and the time for Ethereum to shine, in my opinion, is going to start very soon. Do you agree with this analysis or disagree? Let me know down in the comments. If you want more analysis like this, and especially for the quick alpha that I am tracking when I am following these catalyst events as they play out, you should definitely follow me on X at VirtualBacon0x. Also join our free trading community, The Coiners, where we have altcoin analysis, trade signals, live streams, Q&As, and a live chat that you can ask other people and share your opinions and bias check with your own analysis. That's it for this video. Thank you for watching, and I will see you on the next one.